Hey everybody, welcome to Mortgage Today for Wednesday, August 9th, 2023, and oh, what a day it was. MBS were up 5 basis points in the early hours of trading. Stocks were flat. A relief rally in Italian shares boosted risk appetite, while U.S. equity futures pointed to a recovery on Wall Street in subdued trading Wednesday. Other markets tilted risk on, with the euro strengthening and copper rebounding. Improving sentiment faces a key test on Thursday when the U.S. Consumer Price Index is published. The so-called 5-year inflation break-even has risen to around 2.5%, just shy of the peak in April of 2022, when it reached the highest since 2014. Thursday's reading is expected to show the consumer prices grew 3.3% in July from a year ago, up slightly from the prior month, but still at the slowest pace in 2 years. Fed officials seem to be split on the Fed's next move, with some stating that the current hiking cycle must come to an end and others saying that the rates have further ground to climb to bring inflation back to the target. The jobs market has been resilient throughout the Fed's rate hiking, a backbone to strengthen the economy that the Fed has watched closely. China has slipped into a deflationary cycle, which almost certainly affect developed economies as their fight against inflation. Their consumer price index fell 0.3% year over year in July, and their producer price index was down even more. China seems to be following a familiar pattern where a period of supernatural growth triggers a real estate bubble similar to the US in the early 20th century and Japan in the 80s and the 70s. That bubble has burst, and China is grappling with a massive oversupply of property along with vacant cities built on spec. China will probably try and export their way out of the problem, and since their domestic demand is moribund, they will run a massive trade surplus. That means China will buy US Treasuries and MBS instead of US goods and services, which will help push down rates in the US, although that will take a long period of time to play out. The San Francisco Fed released a paper estimating that housing costs will drop from 7.8% to 5% by November, then go negative in 2024. Interesting. I don't agree with that. This will help inflation. Cleveland Fed is predicting that the headline inflation number will increase 0.4% in July and increase from 3 to 3.4% on the headline number, largely due to energy prices. Credit card debt has reached record highs, surpassing $1 trillion. That should be $1 trillion for the first time, rose $54 billion in quarter two alone. Average rate moved to the range of 21 to 25%, which is a new record. Delinquency rates are the highest in 5 years as well. We got a ho-hum 10-year auction, so there's no drama in bonds in the afternoon. Came in at 3.999 versus 3.998 expectations. Bid to cover was 2.56 versus a 2.45 average, and the bond market didn't really react to that at all. All in all, on the eve of a big-ticket economic data, it's never a bad idea to revisit what we already know to be true. This one, it's pretty much a coin flip. If there's a way to know how the data would come in, or even if it was likely to come in weaker or stronger, traders would be all over it, and we wouldn't have to wait until the data actually arrived. Thus, locking versus floating on afternoons is simply a form of gambling. If you float, you're gambling in order to try to get better rates going lower. If you lock, you're gambling on hope that rates don't drop so much after that, and you lose the deal. The only decision is which one scares you less. In my opinion, lock them up. MBS closed the day up 11 basis points. Stocks were down 31 points. MBS closed at 99.08, which is just right underneath that 25-day moving average. It has been trending down. And we still have the floor at 98.716. We also got news that United Wholesale Mortgage has reported its second quarter earnings that beat the street's estimates, with origination volume climbing to $31.8 billion, which was up 43% compared to the first quarter and up 6.4% compared to a year ago. On sale margin compressed to 88 basis points in quarter two compared to 92 in quarter one and 99 a year ago. Purchase volume was 88% of total volume. UWM is guiding for the third quarter volume to come in between 26 and 33 billion and gain on sale to range between 75 and 100 basis points. Stock is up about 7% in the pre-open. So this is interesting. So they came in at 31.8 and 88 basis points versus yesterday, or the day before, we actually got numbers from Rocket The numbers came in earlier this week, and their volumes were at about $22 billion, but their gain on sale was about 3 times that of United Wholesale. So it's interesting how these wars for business are going to play out.